Hello and welcome to another episode of the LendAPI Partner Podcast. Today, my guest is Rhett Roberts, who is co-founder and CEO of LoanPro. Rhett, welcome to the podcast.
Great. Well, thank you for having me. Excited to have the conversation today.
Now tell me, how did LoanPro get started?
We have a pretty interesting origin story or genesis story. I did my education in investment finance, and all of the years growing up, my brothers and I did series of different kinds of jobs or businesses that we had created. And post business school, I went back to Wall Street and I was like, do I really want to do this? Right. I got married about that time. And we decided, you know what, let's go ahead and let's try this entrepreneur route. We didn't have kids and we thought we could take the risks. So I joined my two brothers and we actually started a windshield repair company. We invented a bridge you could suction cup to a windshield, inject resin into the layers of a rock chip in a windshield, cure the rock chip so prevent it from cracking out in most cases. And we ended up creating software to submit the claims to the insurance companies. We franchised and sold that. We started a car dealership, bought and sold cars for a few years, and we learned we could sell a lot more cars if our customers could get financing. This is 20 years ago. And at the time, financing was not as readily available and accessible as it is today. And so there was like prime financing, go to the credit union and pay cash. And then there was like subprime. And there wasn't there wasn't like a friendly gradient between the two. So we started doing our own financing of auto loans and we fell in love with everything about lending. But we experienced a new challenge. The software to manage our own portfolio of loans, let's just say it left a lot to be desired. So having some confidence from a prior gig of the software that we built to submit the claims to the insurance companies, we had, hey, let's go ahead and build this within our own lending company. And we did. Others reached out to us and they asked if they could use it. For a few years, we're like, no, like go build your own thing, right? We can give you some pointers. Because it wasn't intended to like commercialize or to monetize this product. It was just a product inside of our own lending company. But fast forward to present day, what was that internal product turned to what LoanPro is today. So it's kind of this, we didn't come out of business school and say, oh, this is the idea. It was this like deliberate plan and then a series of emergent plans that came up through the journey.
Very interesting evolution from windshields to car dealership, to then to car loans and doing the lending for that. Very interesting evolution, but also you felt the pain yourself, right? So you knew what you were solving for.
Yeah, remember back business school, McKinsey's first law, first understand your problem. We ate all of our own cooking and we could understand it. And I think that's an important piece is we didn't need to go do like a market study to see what's the pain out there. Like we experienced it firsthand. And when there's a pain point, we actually had very organic demand coming to us when we did auto loans and others came and they gave loans of another flavor. And some were doing personal loans. Some were doing like, a fix and flip. Some were doing lines of credit or invoice factoring, all these different flavors of loans. And they had a very similar problem. And so we sort of picked up on the trend of that. I did that entire journey with my two brothers. We still spend a lot of time together. We expanded the scope of our partnership. So I run LoanPro. We started a public charity called Become More, and one runs that, and also an investment fund that we run as well. So the scope of our partnership has expanded, and it's been a great journey.
Very, very interesting. Now, what would you say today is your number one use case that you solve for?
So kind of back to our origin is what problem were we solving? So a lot of our competitors, they're trying to solve the problem of how do you give more loans? And so we really focus on loan origination, underwriting, decisioning, workflow, those kinds of things of like, how do you give out loans? Our problem was a little different. Our problem was after I give a loan, how do I get my money back in a compliant and convenient way? And so I would say that's the number one use case is loan administration, loan servicing and collections. And now there's a whole bunch of little permutations of that use case. This might be customers who we're almost 50-50. So footprint wise, we're in every county in the United States. If you did a heat map of the balances, we've got 600 plus customers that use our system, ranging from a mom and pop lender to very large lenders. We really serve three markets. So the first is private credit. Think of like non-depository. The second is financial institutions, banks, and credit unions. And the third is card issuers. So anyone who wants to issue a credit card, the system under the hood that does the billing cycle, accrues the interest, where you dispute the transaction, everything to manage that side of it. So with a little bit of that background, the use case is really still the origin. How do you do all the servicing, collections, administration? And when we ran our own lending company, I'll give an example. We had a customer, and one of the catalysts of why we ended up building software is we had a customer call in, and the software we were using at the time was a little disappointing or frustrating. Like the customer would call in and they would say, a life circumstance happens. Can I change my due date?
Yeah.
And there wasn't a button for that. Right? We're like, well, it can't be the only time this ever happens. It's a pretty normal situation. Compound that, it's been pretty interesting. So we see a lot of consumer lending, a lot of business to business. It's about half of the final use of proceeds is a consumer or a corporate. The reason I delineate between those two is from the compliance lens. The rules are very different if it's consumer finance versus if it's in a corporate lending space. And one of our theses is that those lines will start to come closer to one another. So for example, if you're in the business of giving loans to micro-sized businesses, so maybe like an Uber driver, you want to factor their receivables to give them an advance on the next 10 drives they're going to do. Is that a consumer loan or is it a corporate loan? And well, it depends on who you ask, right? Some people say, well, what's the signing entity? Is the signing entity a sole proprietorship, or is it an LLC? And that's how they delineate. Our thesis is that those lines will start coming closer and closer. You'll see some hybrids and with some easy word changings in the regulation. So we built one platform that can support the entire spectrum of consumer as well as corporate lending with different loan policies at the program level within the system. So the rules play nice.
Yeah. No, and that's also helpful. If at any point the regulation changes, you're very easy to switch from one to the other, sounds like.
Well, and they're changing rapidly right now, and they have been the last number of quarters, but especially with the new administration. Although I think it's important to say from a regulatory side of things, we've gone through many cycles, have been doing this a while, and I think it's important to highlight that the underlying goal stays the same. Everybody's looking for the safety and soundness of the U.S. financial system. Both sides of the aisle are looking for the same thing. However, the strategy about how to get it can feel very different. And so it feels like a pendulum swing going back and forth in a yo-yo effect. And having a platform that can comply with the different rules, those rules might come from the alphabet of different government agencies. So like the OCC, FDIC, but it might be like the FFAEC. It might be all these different layers, or they could be like a loan policy or a bank or a board decision or a credit facility, all these different layers of rules.
Now, Rhett, tell me your favorite customer story.
So we get to see a lot of interesting things that folks do. One of the use cases that we provide, and I'll share this example. I'll provide two of them. One's during COVID. So as we recall during the COVID years, there was a lot of high levels of uncertainty. And that uncertainty was send your employees home for an unknown amount of time to work from home. Well, we were able to solve that problem just fine because our software is software as a service. It can be distributed and you can access via the internet. So great, take your laptop, go home. You can still access it, update some permissioning and security so you can access from home. You're good to go. That solves part of the problem so that you don't have to set up like a network and those things if you're like an on-prem solution. But the second problem was that our customer, this particular customer I have in mind, they do personal loans.
Yeah.
And they specifically target a few different cohorts of different, consumers that are in different life situations. And one of them is for U.S. teachers.
Mm.
So they'll give an unsecured loan for folks that are teachers by profession. And what they were experiencing is the news was telling everybody, call your lender, they're going to do something for you because of COVID.
Yeah.
But there was no standards. There was no like what you're going to do for them, who qualifies, and if they qualify, what do they qualify for? And so within a 48-hour period, we were able to work with this customer. They first identified a rule to identify a population set who would qualify. So maybe the idea would be if your loan is in a certain situation, if you have your next payment coming up, or if you've made your previous payments on time, or if you're delinquent and so forth, you can come up with an attribution logic to say, let me identify a population set and put a flag on those accounts. They were experiencing a record high volume of inbound phone calls when they sent their employees home.
Yep.
So we were able to attribute the accounts with that rule-based logic with a flag, expose that in the IVR phone system. When the customer calls in, they authenticate, it checks to see if the flags are there, and it intercepts their phone call and says, hi, Jane Doe, we see you qualify for XYZ program. Is that what you're calling about? And they could self-enroll for it. And it did call interceptions where if you look at their backlog of phone calls and the wait time, they would go, they were like under a minute. COVID happened. They went up over 1 hour. So huge wait time. Implemented our thing within 48 hours. They went down under 20 seconds because and their volume skyrocketed. And the reason for that is being able to have a dynamic system that can do this loan administration, servicing, and collections, where you could find the account. You don't need to do a software release. You can tag it and so forth. That's a pretty cool one. The second one is in our card practice. We have something that we filed and received several patents on called transaction level credit.
Yeah.
And we have a credit union who focuses on U.S. military. They came to us and they said, hey, we've got a challenge. Just when the service member goes active duty, we drop being top of wallet. And so how do we solve that problem? Because we're the credit union who focuses on U.S. military. I want to state of wallet for them. So we talked to a bunch of customers who came up, let's use our transaction level credit. The challenge is the relationship generally transfers from the active duty service member to their spouse. And that creates an inflection point where they may change financial institutions, use the card that's in their pocket instead of the other one. And so there's a couple easy things. One, send out an empathetic communication to the family in addition to the service member and say, hey, thank you for your service. We know it's hard for you and so forth. And by the way, we've already attributed your account to your family's active duty. And so not only we say thank you for you, we know this can be a difficult time. And so we've taken your primary residence, geofenced it, drawn a circle around your home, and any groceries that are purchased during deployment, we're going to do it 1% interest for your grocery transactions. And hey, by the way, we want you to stay in contact with your loved one. So your Sprint or your T-Mobile bill, we're going to treat it this way and so forth. They identified a handful of what we call transaction level credit using a attribution from the transaction itself and treating that uniquely inside of the card program. So that's been a really interesting thing. And we've been able to do anything you could imagine in a loyalty or rewards program, but just pull it forward into the financial instrument itself. And it provides a key differentiator for our customers.
Yeah, that is a great customer story. And especially we talk a lot about like personalization and hyper-personalization. This feels very personalized what you're doing here. And I think there's a lot of focus on offering people new products, but actually doing that during the servicing journey is very important as well.
Yeah, you nailed it, right? The idea that lots of organizations pay a very large amount of money to acquire a customer. But if you go interview lots of borrowers out there, there's a fairly resounding sentiment that the lender forgets about them after they get their loan. They're like, white glove experience during the origination journey process, but after I got the loan, it's difficult to engage. So our thesis has been, hey, it's not that the lender's trying to do that. Maybe it's the technology that they're using makes it really difficult. So if we solve the technology problem, then it can provide extending that customer delight through their entire journey. And if you have a more delighted customer, you're constantly providing a great experience. You can cross-sell, upsell, make a portfolio be more performant. One thing I think is really interesting, there's a study out there a few years back that shows that about 2/3 of lenders, if a borrower calls into a lender and does some version of, hey, I haven't missed a payment yet,
Yep.
current right now,
Yep.
however, this situation happened. How
Yep.
can you help?
Yep.
2/3 of lenders, their answer is call back after you miss a payment. Well, the problem is what does the consumer hear? They hear, you're going to help me. But why did the person who answered the phone say that? Well, it's because their software didn't show them what the available options would be because the account didn't yet have the state of being delinquent. So we think we can solve by providing a better software experience, high levels of customization and personalization for these lending programs. We can actually make the servicing, administration, and collections process a lot more personalized and result in the portfolios being more performant. Because if you tell your customer, oh man, I'm sorry, that's the situation that you're in, but this is what we can do for you. Actually, they keep paying and you can be engaged with them instead of them getting on the phone saying, oh, they're not going to help me. I better figure something else out. And then that trade line becomes delinquent. So it's a little bit of common sense, but you have to have the right tools to provide to folks so that they can provide the right curated, delightful experience to their customers.
That's probably a great point to wrap this up. Thank you, Rhett, for being on the podcast and for providing customer delight with LoanPro.
Awesome. Thank you so much. Thanks for having me today.
This was another episode of the LendAPI Partner Podcast. We'll see you next time.